Well, hello, everyone, and welcome. This is Cynthia Tomaine with Interactive Brokers, and thank you for joining today's webinar being brought to you by GreenTraderTax.com. I'm very pleased to have Robert Green with us here today. So with that, Robert, what I am going to do is let's get started.
All right, let's get started, everyone. Investment fees are not deductible after the new tax law came into effect for 2018, but borrow fees for short sellers are. So we're going to talk about what makes the cut, what doesn't. I'm Robert A. Green, CPA, managing member of Green, Neuschwander & Manning, LLC, our CPA firm, and CEO of GreenTraderTax, our content company. I'm a leading authority on trader tax. You may want to check Green's 2018 Trader Tax Guide. It discusses the Tax Cuts and Jobs Act impact on investors, traders, and investment managers. I'm a contributor to Forbes, and you'll see the content in leading brokerage firms and other financial media. This information is educational. It's not intended to be a substitute for specific individualized tax, legal, or investment planning advice. Where specific advice is necessary or appropriate, you may wish to consult with a qualified tax advisor, CPA, attorney, financial planner, or investment manager. This area is unclear, and you may want to consult with our firm or a tax attorney or some other competent professional. There are different opinions in the space for the content we're discussing today. Now, Robert Green, and the Green Companies are not affiliated with Interactive Brokers. They're a brokerage firm. We're a CPA firm. Here's the overview for today. The Tax Cuts and Jobs Act suspended certain miscellaneous itemized deductions subject to the 2% floor. And that list includes investment fees and expenses. So to lower the corporate tax rate, when it came to it for individuals to help pay for it and to flatten the code and make it simpler, they just got rid of a whole slew of deductions. They suspended them until 2025. Tax Reform Part 2, which the House is talking about passing this fall, and the President supports, would make some of those suspensions permanent. So a lot of investors are going to be upset this year to learn that a lot of their cherished deductions are gone. They can't take them. There is a higher standard deduction, but many people exceed that or used to. Investment expenses, if you have a hedge fund or an investment manager, you're paying large advisory fees, you're not getting a deduction for that anymore. That hurts. Now, however, the new law retained other miscellaneous deductions not subject to the 2% floor, including short selling expenses like stock borrow fees. A lot of people are perplexed by that. What is that other miscellaneous deductions? If you look at Schedule A, you'll see there's a section for the job expenses and certain miscellaneous itemized deductions. But then there's on line 28, there are other miscellaneous deductions that are not subject to the 2% floor. The tax code did not suspend those. So you need to know what was suspended, what wasn't. Now, while individual taxpayers may no longer deduct investment fees and expenses on Schedule A starting in 2018, they are still entitled to deduct investment interest expenses up to net investment income as calculated on Form 4952. So if you have margin interest as an investor, you're allowed to deduct it, but only to the extent you have investment income. And if you don't have sufficient investment income, it's a carryover to the next year. Now remember, when you have itemized deductions, if you don't have taxable income, they can be wasted. And if you're taking a standard deduction, it's kind of wasted. Now, short selling expenses, the new law, if you look at it, and there's a link here, and you click on and go to page 95, it's got a complete list of suspended miscellaneous itemized deductions. On that list includes expenses for the production or collection of income. So if you go through that list, it does not include short selling expenses. But you're going to see today as a theme in this presentation that this is sort of like, where do you find short selling expenses? It's not clear. It's a little bit in this area, it's not in that area. This is a list, but it's not an exhaustive list. you have to find its home, and it's not 100% clear in the tax code. Now, 67B, which is after some old revenue rulings, 67B, when you look at it, that's the code section for the 2% miscellaneous itemized deductions. That's the list that talks about those deductions. Well, 67B excludes certain deductions from the 2% floor on miscellaneous itemized deductions. Number 8 is any deduction allowable in connection with personal property used in a short sale. Now, our tax attorneys think that personal property relates to securities, and so this is talking about expenses for a short sale, and we think that that includes borrow fees. So borrow fees are not suspended in the new Tax Act. Where they go, there is some debate. Now, we said to ourselves, well, if borrow fees are not specifically a cost basis item, and I know some people think they might be, but if they're not, could you make them a carrying charge with an election to capitalize them as a addition to cost basis versus an itemized deduction? Now, we have a lot of CPAs on the call today as well, because my blog post that related to this content today, which was published in Forbes, was picked up by Accountants Daily newsletter as the top story of the week, and it's remained the top story all week. So a lot of CPAs are interested. So let's look at this. Investment fees and expenses. First, let's step back away from the borrow fees and just, again, talk about the investment fees and expenses, which a lot of investors pay. We're not talking about commissions. We're talking about fixed fees, advisory fees. Because investment fees and expenses are no longer deductible, accountants might consider a Section 266 election to capitalize investment expenses as carrying charges to deduct them from capital gains and losses. But that won't work. The IRS has a chief counsel memo from 2017, and we're going to go over that shortly, that said taxpayers could not capitalize investment management fees under Section 266 because they are managerial rather than transactional. So again, you have an expense that was suspended as a miscellaneous itemized deduction, as certain miscellaneous itemized deductions from the 2% floor. So now that you know that, can you deduct it some other way? And the answer is you cannot treat it as a carrying charge to deduct it from capital gains and losses as an adjustment. Now, under that same rationale, why you can't capitalize it under 266, we think that short sellers probably could capitalize borrow fees under Section 266 because they are transactional, not managerial. However, it is safer to deduct these short sale costs as other miscellaneous deductions on Schedule A, line 28, which is where we think they go. The new tax law suspended the piece itemized deduction limitation, so the deduction has full effect on lowering taxable income for regular and AMT alternative minimum tax. So it used to be that if you did get over the 2% limit for investment expenses, you got over the 2% limit of AGI, which is the threshold, you still had to worry about an overall itemized deduction limitation with a piece limitation. Well, that's also suspended under the new Tax Act. Now, there is one concern about using line 28. When you look at Schedule A instructions for line 28, it lists all the 67B exclusion items, but it left out number 8 for short sale expenses. We think that there is substantial authority for using line 28 and that the Schedule A instructions are not meant to be an exhaustive list. Let's talk about stock borrow fees a little bit more. Short selling is not free. A trader needs the broker to arrange a loan of stock. Might be from another account holder's account. It may be from a stock loan intermediary. Brokers charge short sellers stock borrow fees, especially on hard to borrow securities. Some of them might call it loan premiums. Now, tax research indicates these payments are for the fees for temporary use of property. Now, watch out. And this again leads to some confusion in this area. Many brokers refer to stock borrow fees as interest expense, which confuses short sellers. They think it's investment interest and not something else. For tax purposes, we think stock borrow fees are other miscellaneous deductions on Schedule A, line 28 for investors. If you happen to have trader tax status, which we've covered on other webinars before, you're eligible, you're in the business of trading, then you're not using Schedule A for fees related to your trading business. They're going to be business expenses unless you're capitalizing them as part of gains and losses because you're holding it for less than 45 days. We'll go over that later. Now, borrow fees are not interest expense. We've analyzed that. The Dupuy case is revenue rulings. It doesn't give rise to unrelated business income tax in a tax-free in a retirement account. It's not a loan of money. It's not interest expense. So investors should not include them in investment interest expense on Schedule A. Let's talk about the impact of tax treatment. You know, where you put stuff on your tax return, it has significant impact. There's a significant distinction that has profound impact on tax returns because investment expenses face greater limitations in 2017, the 2% floor, the piece itemized deduction limitation. And for 2018, they're entirely suspended versus investment interest expense, which is deductible up to investment income. And then you have these other miscellaneous deductions for borrow fees on line 28 that remain fully deductible for regular or AMT. Investment management fees cannot be capitalized. We discussed that previously. Let's go through some of the details on why. The IRS said there's no alternative tax treatment. In the 2017 IRS Chief Counsel Memorandum, and there's a link here that you can read that memorandum, the IRS denied investors from capitalizing investment management fees paid to a broker as carrying charges under Section 266. There are capitalization code sections 263, 266. We're looking at carrying charges in 266. Investors, they wanted to avoid the alternative minimum tax and other limitations on miscellaneous itemized deductions, so they thought that they could treat it as a carrying charge. And this is even a bigger problem for 018 because it's not deductible at all on Schedule A. The memo said consulting and advisory fees, that's how they considered those investment fees. They were, in fact, the agreements had called them consulting and advisory fees. They were not carrying charges because they are not incurred independent of a taxpayer acquiring property and because they are not a necessary expense of holding property. Stated differently, this is the quote from the memorandum. Consulting and advisory fees are not strictly analogous to common carrying costs such as insurance, storage, and transportation. Borrow fees might be able to be capitalized. And here's a rationale. Borrow fees seem to meet the requirements raised in the council memorandum under 266. Again, it's safer to use the Schedule A, other miscellaneous itemized deductions. The Treasury Regs 12661B1 highlights several types of expenses that qualify as carrying charges, including taxes on various types of property, loan interest for financing property, costs to construct or improve the property, and expenses to store personal property. A short seller cannot execute a short sale without borrowing securities and incurring borrowing fees. They are a necessary expense of holding the position open. Borrow fees are not for the management of the property. They are for the acquisition, financing, and holding of the property. You're not going to do a short sale without borrowing securities, and if it's hard to borrow, you're going to have the hard to borrow fees. This is not for the management of the property. It's related to the acquisition, financing, and holding of property. Now, in a similar vein, let's contrast investment fees with brokerage commissions. Investment fees and expenses. So investors engage outside investment advisors and pay them advisory fees, including management fees and/or incentive fees that are based on performance. Other investors may pay a broker a flat fee or a fixed fee rather than a commission on each transaction. These investment fees and expenses are managerial. They're not transactional. They're not based on how many trades the manager makes. They're kind of fixed or flat. Under that chief counsel memorandum, they cannot be capitalized into the capital gains and losses under Section 266. Conversely, brokerage commissions are transaction costs deducted from sales proceeds by the broker on your trade confirmation and added to cost basis on broker trade confirmations and reported on 1099-Bs. This tax reporting for brokerage commissions resembles a carrying charge. Now, short seller payments in lieu of dividends. When traders borrow shares to sell short, they receive dividends that belong to the lender, the rightful owner of the shares. After the short seller gets these dividends, they're reported on the 1099-B, the broker uses collateral in the short seller's account to remit a payment in lieu of dividend to the rightful owner to make the lender square in an economic sense. You're the short seller. You get someone else's dividend that belongs to them. You just borrowed the shares. You didn't get the right to have their dividend. So you have to pay them back. And how do you deduct that payment in lieu of dividend? Well, Section 263H, which is very limited, it only is for payments in lieu of dividends in connection with short sales. It requires the mandatory capitalization of these payments if a short seller holds the short position open for 45 days or less, 1 year in the case of an extraordinary dividend. So you're selling short, you have an open short position for 15 days, 30 days. Well, that's less than, it's 45 days or less, so you have to capitalize it and show it as an adjustment to your capital gain or loss. If a short seller holds a short sale open for more than 45 days, then you're going to treat it as an investment interest expense. So that is a time when you start to use investment interest expense. And we think it's just in this case. Now, other short selling payments are not added to cost basis. This 263H is just for payments in lieu of dividends. It's not for borrow fees. It's very limited. Now let's look at investment interest expenses. So investment interest expenses, look in section 163D3C, it states, for purposes of this paragraph, the term interest includes any amount allowable as a deduction in connection with personal property used in a short sale. So a broad reading of any amount could be construed as opening the door to borrow fees, but I doubt that. Our tax attorneys highly doubt that. Again, with the Dupuy case, revenue rulings, it's not interest expense. We believe the term any amount refers to those dividends in lieu those payments in lieu of dividends held more than 45 days. We just went over that. So it was very specific just for that. Now, again, we are suggesting an alternative tax treatment if you need it. And again, consult with a tax attorney about it. Under certain conditions, 266 allows capitalization of interest to finance a property. If you're not getting any benefit from your payments in lieu of dividends for under 45 days that you had to treat as investment interest expense, short sellers and others might want to consider the possibility of a 266 election on investment interest expense, especially if they plan a standard deduction and don't have sufficient investment income. Again, excess interest is a carryover to subsequent years. Now let's talk about transactional versus managerial expenses. When you consider the 266 election, remember the managerial expenses, advisory fees were barred, but the transactional expenses are allowed. So the transactional expenses include storage of precious metals, storage of cryptocurrency, borrow fees, excess risk fees on short sales, margin interest. Those can squeeze into the 266 election, we believe. The managerial expenses, they were bounced out in that chief counsel memorandum, and those include your investment management fees, fixed or flat fees paid to brokers, your computer costs, equipment, all your related investment expenses, software, charting, education, mentors, coaching, monthly data feed fees, market information, subscriptions, travel, meals, supplies, the works. Remember, education was not allowed even as an investment expense before under 274H7. If you're going to make the 266 election, this is what you do, and this is how you do the tax reporting. You consider the election statement with your tax return, including on extension. So you can do this for 2017. Let's say, as an example, for 2018, for tax year 2018, taxpayer herewith elects under Code Section 266 to capitalize short selling expenses as carrying costs applied to capital gains and losses. You would explain the election and tax treatment in a tax return footnote. Tax reporting with Section 266 election. Report short selling expenses for realized closed short sales as expenses of sale or exchange on Form 8949, that's the sales or other dispositions of capital assets, in column G, adjustment to gain or loss. So on the 8949, there's a spot to put in your expenses of sale or exchange. If you haven't sold the positions yet, you're going to defer those borrow fees and that adjustment until you close the position in the subsequent year. Again, if you get full deductibility on A, it's safer to use that approach. Now let's talk about trader tax status. If a short seller qualifies for trader tax status, then short stock borrow fees and other short selling expenses are deductible as business expenses from gross income. If a trader engages an outside investment manager, then investment advisory fees remain investment expenses. So if you can be a trader and also have, a separately managed account with another investment advisor, where you have some pass through from a hedge fund, and you can't change the character of that. So let's look at the board and some questions and some other things to look at as well. So again, I'm going to get to the questions, but for those who want to follow up with us, come over to the website, GreenTraderTax.com. Give us a call. Send us an email at info@GreenTraderTax.com. So there is a blog post about this as well. Over here, investment fees are not deductible, but borrow fees are. And by the way, in a similar vein, family offices try to deduct investment expenses. And I had a whole prior blog post about that, how to avoid the IRS challenge on your family office. Okay, Josh says that he saw an article that borrow fees could be treated as additions to cost basis. Reduce short-term capital gains. Send that article over to me. That may be referring to the payments in lieu of dividends we talked about adding to the cost basis. You can send me that article. We'll take a look at it, Josh, and follow up with you separately. If you have carry forward margin interest in prior years, but start trader tax status in 2018, can you recover? No, once something is a carryover item, trader tax status is not going to change the character of that for you. You're still stuck with that same treatment. Josh, again, why does the IRS list not include short sale expenses? Well, short sale expenses are number 8 in 67B, but again, the instructions on Schedule A left it out. We thought that that was inadvertent. We don't think that the list on the instructions is exhaustive, and that there's substantial authority to treat it as other miscellaneous deductions. Now, we spoke to a lot of CPAs and tax attorneys, and there are different opinions on it. It's not 100% clear. We tried to confirm it with the IRS Chief Counsel's office. They're not 100% clear on it. They couldn't really address it, and they have it on a list to get back to us, which could take a long time. So again, if you're using a treatment and it just doesn't work for you and you want to consider some other treatment, consult with an expert about it. Someone said, is this for individual traders? This is for, a lot of people don't have trader tax status. If you have the trader tax status, that's always a great answer to a lot of problems. It just winds up being a business expense, deducted in your trading business entity or in your Schedule C. And you don't worry about all these nuances of Schedule A and the carrying costs. Someone asked for that page 95 of the new law that suspended the miscellaneous itemized deductions. Go to the blog post, and right there in the blog post, let me scroll down to that. Let me close the questions for a second. So you'll scroll down, and you'll see here, it says right there in page 95 in the new law, and you would click that, and the new law would open, and you would go to page 95 and see that. So let's go back to, and there's a prior blog post about how to deduct borrow fees as well. And on that, Roger Lawrence said that the short sale expenses, stock borrow fees are not investment interest expense to support any interest deduction. You can see it here. There must be valid interest-bearing obligation under state or federal law. See Stroud versus U.S. The IRS has ruled that short sales do not give rise to an interest-bearing indebtedness, Revenue Ruling 95-8, and that was after 67B came out in the mid-80s. Rather than the short sale borrower has a liability under state law to return the borrower's stock and borrow fees, but this is not interest expense. This is why short sales do not give rise to Section 514 UBIT, no debt financed property, which is a specific code section in issue in the ruling. The revenue ruling is based on Deputy versus DuPont. The DuPont case applies by analogy here because there can be no interest expense generated in a short sale. So we don't see any authority for treating it as a direct cost of sale on Schedule D. And the broker doesn't pick it up that way on 1099Bs. But again, some brokers will conflate the issue, as I pointed out in this blog post, short selling how to deduct borrow fees. Some of them use terms like, you'll see how they conflate it. So read this blog post as well. Interest rate charged on borrowed shares, or fee rate, or net short stock interest. So they conflate it, and maybe they thought there was some authority for treating it as interest expense. Again, there's some confusion. Now, by the way, I also have a blog post about IRS tax rules that are unique for short sellers on the constructive sales when you sell against the box, on the constructive sales of appreciated positions, on how to deal with holding period of short-term versus long-term capital gains, the special rules for short sales and publication 550. So go over to that blog post as well. So if, again, you go back to our homepage and you go to the current blog post, at the bottom of the current blog post, you have a link to those other blog posts on the issue. So let's go back to the questions that you have. So Hervé says, in a dual entity solution qualifying for TTS, management fees remain a business expense. So Hervé, what you want to do is go over to the blog post that I mentioned about the family office from from 6/28. If you open that up, that explained how a family office, if you're just an individual and you have an investment partnership, and then you have a management company, your management company is not going to get business expenses because you're managing your own investments. You're a micro family office. However, if you have trader tax status, it does work. So, and that's explained in the blog post. So go back here, trader business partnerships. So you're replacing the words business for investment. So it works 100% the dual entity solution for trader tax status. But the dual entity solution is not a fix for when you're managing your own investments with an investment partnership and a management company. So family offices are also scurrying about, can they get a business deduction when otherwise the IRS may treat it as investment expenses when they're paying those outside investors. So this is part of the theme that we're covering. What do you do about the suspension of investment expenses and fees? Are there ways that you can go about getting deductions? So this is look at both of these blog posts. So let's go back to the home page. Let's go back to the questions. Let's look at John. IB historically has not listed borrow fees on 1099-Bs. They do list borrow fees as 1099 interest income. So what happens is, what you're talking about, I believe, is when you are the lender, when they go into your account, if they go into your account to take shares to lend to someone else, and you receive the payments in lieu of dividends, that's other income on line 21, and that's going back to that other blog post about the unique rules. So take a look at that. Otherwise, follow up with me. I don't believe that brokers should or will report borrow fees on 1099-Bs. I can't speak for what IB will do in the future. Jeff, can you ever be in the trader business of managing securities if you subcontract sub-advisors and don't do any trading yourself? No, you need to make the trades yourself for trader tax status. And a 475 election is only allowed when you have trader tax status. So again, Josh, on Schedule A for other miscellaneous deductions on line 28, you're deducting borrow fees. And if you want, you can say Section 67B8, borrow fees. You can email us, go to the Contact Us page of our website and send us an email. You can email info@GNM-Trader-Tax, or you can use this Contact Us form. And we look forward to hearing from you soon. And Cynthia, back to you.
Well, Robert, thank you so much. A lot of useful information in today's webinar. By the way, we have been recording today's event, and each of you will get a direct link to today's recorded playbacks shortly after today's session ends. So if you want to come back and review those concepts, simply watch your email later on today for a direct link to both the slides and the recording. Also, keep in mind that by going to GreenTraderTax.com, you can access Robert's recent blogs and locate those documents that he's been talking about as well. So with that, we are going to conclude our webinar for today. Now, do want to remind you, we'll also be posting today's event on the Interactive Brokers website. Underneath the education menu, there's a webinars link where you can find not only today's event, but using the filtering criteria. And if you filter by Robert Green, the presenter, you'll find a host of information that's available from previous events, including trader tax status and other items that he's been discussing here today. So please do check out those prior events as well. So with that, we are going to conclude our event. You can all exit today's session using the X in the upper right-hand corner of your screen. Thanks, everyone, for your participation. We do appreciate the time that you have spent with us here this afternoon. Have a great rest of your day, everyone, and thanks. Special thanks to Robert Green as well for terrific information in all of his presentations. So thanks once again, everyone. Have a great day.